Hey everyone, welcome back to Corporate Decoder. Today, JWLY Sons Incorporated just filed a significant acquisition announcement, and I'm seeing one key detail that investors need to understand. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is all about a major acquisition that expands their content business. But the real story is how they are paying for it. We are looking at an 8K filing from Wiley Sons Incorporated, a company you might know for its educational materials and research publishing. This form is used to announce when major events happen, like a big company purchase. On the 1st of June 2026, Wiley Sons, through a subsidiary in England, bought Emerald Publishing. Emerald Publishing is a research publisher based in England with a huge portfolio of academic journals, books, and business cases. Think of it as acquiring a massive library of specialized knowledge, especially in fields like economics, business, and engineering. The deal was for a substantial amount, close to 337.5 million British pounds, which works out to about 452 million US dollars. Now, the interesting part of how they paid for this acquisition is that it was funded entirely from the company's existing cash on hand. This is super important because it means they did not need to borrow a lot of money or issue new shares, which could dilute existing shareholders. This is a strong indicator of financial health. When a company can absorb an acquisition of this size using its own cash, it suggests they have a solid balance sheet and good cash flow generation. It avoids the immediate impact of debt on their income statement and the potential for a lower stock price if new shares were issued. For comparison, think about companies that take on massive debt for acquisitions and then struggle with interest payments. Wiley seems to be steering clear of that immediate pitfall. The agreement itself contains standard clauses like representations and warranties, which are basically promises about the state of the businesses involved. Importantly, these promises do not survive the closing of the deal. The seller is providing some indemnity for specific tax matters, which is also pretty standard. There is also a restrictive covenant from an affiliate of the seller, likely to prevent them from competing directly with Emerald Publishing for a period. Following the announcement on the 2nd of June, the company also issued a press release and a supplemental investor presentation. This is where they usually try to put the best spin on the news, highlighting the strategic benefits of the acquisition, like expanding their research scale and deepening their proprietary content. The context from their press release emphasizes how this acquisition aligns with the growth in the AI-driven knowledge economy, which is a buzzword you hear a lot now. The information furnished in this section is generally for public disclosure and is not considered filed in the same way as the main filing, meaning it does not carry the same legal weight if something turns out to be inaccurate. Now, this is a common part of acquisition filings. The company states that they will file the required financial statements for the acquired business and pro forma financial information later in an amendment. This means we do not have the detailed financial picture of Emerald Publishing integrated into this report just yet. They have a window of about 71 days to submit that, so while the acquisition is announced and the price is set, the full financial impact on Wiley statements will be something to watch for in future filings. Beyond the core acquisition details, it is worth noting that Wiley Sons, or WLY as it is commonly traded, is in the publishing industry, which is a sector undergoing significant transformation. Companies like this are constantly trying to adapt to digital trends and the changing landscape of research and education. Acquiring Emerald Publishing, a significant player in academic publishing, is clearly a strategic move to solidify their position and potentially gain a competitive advantage in a specialized, high-value segment of the market. The market context around this deal is also interesting. Wiley has a market cap of around $2.3 billion with a price, to earnings ratio of about 15.5. Current analysts seem to view the company as attractively priced, and recent news headlines do confirm this acquisition. It is not a company seeing explosive growth, but rather a stable player making strategic moves. The fact that they can finance this without new debt or equity is a significant plus in terms of financial flexibility. Ultimately, this filing tells us that Wiley Sons is making a bold move to strengthen its publishing arm by acquiring Emerald. The most positive takeaway is that they are using their own cash, which is a sign of a well-managed company with a healthy financial position. The key risk, of course, will be the integration of Emerald Publishing, ensuring that the expected synergies and revenue growth materialize and that the acquisition truly drives value for shareholders. The jury is still out on the long-term success, but the initial financial handling of the deal is a good sign. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. Like this video, subscribe for more, and join our Discord linked below.